And listen, if you need any help, let me know. I coach people. We coach people all the time, and sometimes you need support. Sometimes you just need a sense of direction. You know, certain herbs and things to use along your journey. Let me know. I'm gonna get your information from Tracy on Facebook.
Well, I was in a wheelchair for 10 years.
Man, that's
Got
awesome.
fed up with it and taught myself how to walk. Took me 6 months to learn how to walk. I still don't feel my legs, and it's been 16 years since I felt my legs.
Wow.
You're like walking
Damn.
me.
Still on that keyboard.
Yeah, she still do it. Right.
Wow.
And she does pretty good too.
Won't
So just so you guys know, okay? You got it. So I'm gonna be plugging y'all in. So a lot of times when you see me, if you see me share stuff like videos at the gym or not me at the gym, but like if you see this, you know, the logo LOJ or something like that, that's coming from here. He just did a video the other day. I didn't get a chance to share it yet. It was just last night, I believe. I was looking at it last night once we got done with the summit, and I was laying in the bed and I saw the video, and he was showing this video from this gentleman. I forgot his name, but for women who have who have painful menstrual cycles, right, and just excessive, you know, flow, essentially how to, you know, certain drinks and things like that that you concoct, basically herb, eliminate all of that, right? So they was going through this whole thing, and it's just so like since I've been connected with him for like the last 2 years, like my whole lifestyle has completely changed, you know. And so likewise, when you start shaking up one thing, you know, everything else start getting shook up too, right? So you got to fight through all of it. So going through financial stuff, physical stuff, like, oh Lord, I got to do something with this hair every day. Oh, I'm not eating this, I'm not eating that. Oh, what we gonna eat? You know. So it's a holistic thing. So just so y'all know, if y'all see some stuff coming from me, LOJ or Tori, make sure y'all find them on Facebook too. You can find them at LOJ. Hold on, let me see something. I'll go to it real fast. Slight plug. Hold on. It's like my brother now. Me, please. And they do a lot of online stuff too. A lot of videos. You know, he has different trainers that work for him and stuff like that. So, hold on. Let me share the screen, then we'll get back going here. Oops, hold on. Let me come over here to Facebook real fast. How your food? Smashing it, on. Dang, why you didn't bring us nothing back? You just ran over there. See how your teammates do you, man? They just gone to the food place, you know, Subway next door. You think he asked did we want did we want a tomato or anything? He said I was just talking about health. So what that mean? I couldn't eat Subway? What you get over there? An ox sandwich. What you get? Some oxtails. Let me tell you something, guys. One day before I stopped eating beef and pork, and I was just getting going with Tori, right? And it's a Jamaican place, like 2 doors down, right here, right? And I met him because me and Josiah was going down there. I was getting me some oxtails, right? Got me some oxtails. I was coming past. He called me, and we ended up talking for like 2 hours. That's when I started training with him, right? And he was like, "You down there eating that beef? You down there eating them oxtails?" I'm like, "Well, I got to eat these oxtails. I don't know what you're talking about." And slowly but surely, like I still, you know, once you've had it, you know what it tastes like, so you can remember, you know. But mentally, the desire to taste it doesn't overrule my desire for greater health. You know what I'm saying? It's kind of like that. So I still can taste it and desire it. Or a ribeye steak, love ribeye steaks, used to, right? And I just be like, no, I'm straight. You know, I'm good. But hold on, let me share the screen. Let me go to this so you guys can find Tori. Hold on. All right, so LOJ. I'm still trying to pull up. Fit Club Support and Social Group. Right, so this is the LOJ Fit Club group. So you guys can, I think you can join the group, right, if you want to. And he posts all type of good stuff in this group from time to time. Some of different trainers, people that have different testimonials, results of different things that's going on. This young lady here. It's a closed group, it looked like. Hold on. I didn't know it was closed. But they do, like Tori does, where he goes to the grocery store like once or twice a month to show people how to shop the right way, right? How to shop at the health food store for certain things that you want. So those types of things, he's got videos in here from that. Guys, all type of good stuff here, okay? So at any rate, his name though is Tori Wiley. Hold on. I'm gonna go to his page too, or just go to him. So that's LOJ. Actually, his Hebrew name is Uri. It's on here as Uri. Uri Ben Adiel. Okay? Uri. Okay? So if you go to Uri Ben Adiel, then you'll see him here. And then you can just request him as a friend, right? And then, he talks all this. Look at this. Lord have mercy. Oh, like the Ghanaian president doing stuff. Like I just watch, I just follow his page because he's always got good health conscious stuff and just good things for your brain and your spirit and your body and your soul, So for those of you that are interested in that, start following him, right? It's levels to this veganism, right? So that's him. So you can learn more about him and listen to him and stuff like that. Okay? Everybody got it? So now, you got it, guys. All right. So now, are we ready? Are we ready now? Because now that we've got everything drawn up, it's really time to start getting into these trades. Okay? Hold on. Let me start the recording back. You got it, Ben? All right, so we are back, and what we're going to go over in this segment is literally getting in and getting out of our trades. Okay, getting in and getting out of our trades. So let me give you some kind of rules of the road. Okay, rules of the road before we start looking at the chart. What we're looking for is everybody remembers our support resistance levels, right? Or our support resistance lines. I want everybody to first understand that those are lines, but in real life, they're more like areas, okay? It's a line, but it could be a little bit above or a little bit below, okay? Price isn't gonna always just hit that line. It could wick above the line, right? Or not even come to the line because it's like a sandwich. The line might be like the meat, right? And then the area, the top and the bottom of the sandwich are like the bread, right? And anywhere in between the two pieces of bread and the meat is where price can go. But what we're really drawing a line at is like the meat. But you got to remember that there could be bread above or bread below, and there's a zone. That's why we call it really zones versus a support resistance line. It's a support resistance zone, right? Or an area, okay? So you might not see that drawn up, but you will. When we did the virtual trading summit and you guys saw Wealthy Pips, you can see when he drew, he would draw it, right? He would draw the support resistance and he would even put the green, which is more like the zone. So you could see it, okay? So I want everybody to just know conceptually, it's not a line, it's an area, it's a zone, okay? That's first. The second thing is that we are going to, hold on there. Okay, so now that we've got our area or our zone, what we're looking for price to do is break through that zone. Breakthrough. Breakthrough means, let's say if we're going up in price. Breakthrough means it reaches an area that was the resistance, right? And instead of bouncing off the resistance, it actually broke through the resistance and it closed up there. Not just it went up there, it wicked and it came back down and closed below the line. We want it to go up and close above the line. Okay, close above the line. When it closes above the line, that's a break. So when you hear us say break, it doesn't mean it crossed it. It means it crossed it and it closed, and that's where price stopped at. That's where price, before another candle started, that previous candle stopped above that line. Same thing going down. If we're going down, we want price to break. We want it to come through the line and we want it to close. Okay? Come through the line and close. Not come through the line, wick, bag up, and close up here. That's not a break. That's a wick, right? We want to break prices down here now. Okay? So we want to break and then we want to retest. So what does that mean? That means if we're going down, price is going to come down, is going to close underneath the line. Now price is going to come back up, but now it's not going to break through the line. It's going to get stuck at the line. And that's our indication to sell, right? Because we came down, it stopped, it turned right back around, it went up to test that area, and now it's going to continue to go back down. So we're looking for price to break and then retest. So break a line, then touch the line again. What we know is that if it breaks the line, we want to have our sale limit sitting right here. So when it comes up and touches the line, it grabs our order and takes us back down with it. Same thing on the buy. This is our line. Price is going up. Price comes up, it closes above the line, then it turns around, it comes down, it hits this line, it does not break through the line, it's going to grab our buy limit, and then it's going to go in the same direction. It's going to continue to going up. Okay, that is the rule. That's the rule to our game. The rule to our game in terms of the orders that we're using are buy limits and sell limits. We're using buy limits and sell limits, not stops. Not stops. Stops means that price is, so it's like this. So price is down here, and you got a buy stop right here, as opposed to a sell limit right here. So you got a buy stop, and you're expecting price to come up, break through, and keep going. Is it possible? Absolutely. It's possible, but there's no confirmation in any of that. You're just kind of hoping it does that, right? So the way that we're trading, though, we're saying, well, we believe price is going to go up too, but before I get in it, it's got to prove to me it's going to go up. You got to do better than a belief. So prices, it might come up, but you're going to come back and touch this line first. Then I'm going to get in. Versus a person with a stop. With a stop, it doesn't have to come back down and retest it. In fact, a stop, your price could come up, it could wick above, and it could grab your order and pull you back down. Do you guys understand what I'm saying? If you don't wait for the retest, you could go up, you have a sell stop or a buy stop, so you think price is going to keep going up in a buy, price comes up, you got to stop at this level, it grabs your order, it wicks, and it turns around and comes back down. Now you're negative. The way that we're learning to trade and teaching to trade is we're not even going to put an order in until it comes up and closes above the line. I don't care what price is doing. Down here, we're not anticipating the market. We're going to wait for price to give us confirmation of something before we just jump in. We're not going to guess. We're going to wait. Price is going to come up. We believe it's going to go up. Good. Let it come up. Let it close. When it closes, we enter our order for a buy limit at the line. When price comes back down, it grabs our order and it goes back up. Okay? Same thing, sale. Coming down for a sale, we're not going to put a stop. A stop would mean we expect prices to just keep doing like this. Okay? We want it to catch us and go down. But it doesn't have to. It could catch us. It could wick way down here, turn around, come back, and go up, and now you're negative. You had no confirmation. So what we're going to do is we're going to wait until it crosses the line. It's got to cross the line and stop. Now we're going to put in our limit. We're going to take this line, whatever the price is at this line, we're going to enter a trade at a sale limit at that line. Then when price turns around and comes back up and gets our line, touches our line, it's going to grab our order and take us back down. Conceptually, do we understand that?
Absolutely. Cha-ching.
Yes.
Okay. Is there anybody that does not understand that we are waiting for a break of a line, it must close, and then we turn around, we go back to the line, and then our order gets triggered? Okay? Okay. Hold on. Oops. I don't know why it's going to say this. Okay. So here we go. Let's go over to the charts, okay? Y'all ready? Game time now. Hold on. Let me get back on this. Euro USD. Okay. All right. Now that we're here, guys, I can zoom in. You guys understand that? I can see my parameters now. Okay, I can zoom in a little bit, or I can go down to the 4 hour, but it's fine. Okay, I'm just gonna stick here. I'm gonna zoom in a little bit. Okay, we mark up on the daily, period. All right, so now, if we look at what price is doing right now on Euro USD, we can see our boundaries, don't we? We can see a trend line here. We can see a trend line here. We've got these support resistance levels here. We can also see we've got a supply zone up there, right? Our demand zone is further down. We can see that price came down and it hit this line right here, didn't it? Right? Y'all see that? It came down and hit that line right there. And then it turned around. What did it do? It broke this level. You guys see that? It broke this level right here, this candle. Hold on. Y'all see that? That candle, let me make it thinner because it's too thick. Okay? This candle broke that white line. Do y'all see that? It went up and it closed above the white line, right? Actually, that's not the one I'm trying to do. Hold on. This is the one I'm trying to do right here. Let's start there. Because this was our initial, we came from down here and we went up, okay? So we started down here and we went up, up, up. Right? It closed above. This candle closed above. Let me zoom in a little bit more. This candle closed above, didn't it? So that's our signal now that we closed above this zone, this white line. Then what we're going to do is we're going to come into this white line at, what is this, 1.15572, right? We would come in and put a buy limit at this line. When this candle, remember, these are days. This is a daily candle. This candle closed at 5 o'clock p.m. on August the 21st. Okay, 5 o'clock p.m. So after that candle closed at 5 o'clock p.m., you could come in and you could now enter a buy limit order at 1.15572. Had you done that, then it might have taken you a day because this candle did not touch the line. But then this candle did touch the line. Now, remember what I said. These are really like areas, okay? It's not just the line. A little bit below, a little bit above. But it came, it grabbed our order, and then it closed below. Don't panic because you're following your rules, right? And what did it do? It turned around and went back up. That's an example. It closed above. We put our buy limit at this line. We wait on price. Price finally comes back. It grabs our order right here on this red candle. We go negative for a little bit, but then we turn around and we go positive. Where would we get out if we're trading zone to zone? Where would we get out? If we got in at this white line, where would we get out if we're trading zone to zone?
The previous level of consolidation.
Well, just stick with me on the easy, what I'm saying right now, which is if we're trading zone to zone, next zone. Exactly. So we're gonna go from this white line to this white line. Do you guys understand that? Yes. Excuse me. No. Okay. So you get in here at this white line, and then we ride the price up to this white line. Remember, this is the daily chart. There's more pips in these little bitty areas than if you were on an hourly chart, guys. You understand that? Okay, so I'm gonna go get my tool and I'm gonna measure. If I got in roughly at this line and I went up to that line, guys, that's 100 pips. Just from that line to that line is 100 pips. Is that a hard thing to do?
No.
No, ma'am. Do you have to know every strategy in the world to get 100 pips?
No, man.
So that's how you can get 100 pips.
Tracy.
Yes.
Okay, so I see where you start and I see where we are supposed to get out. What would you put right here? Where you're getting out?
Where did I just say we would get out, Beverly?
Right in the zone, within the zone, once it closes above the white line.
Okay, once it closes above the white line, what did I say we're gonna do after that?
Trade zone to zone.
Yeah, okay, let's write this down. I want everybody to write this down. This is what we're gonna do. I want y'all to have this down. Okay? Have this down. Okay. Entering the trade. Step 1. Wait for candle to break and close above slash below the level. Okay? Once closed, enter a buy or sell limit at the price of the line. Wait on price to come to you and pick up your order. Get out at the very next level. Now, hold on. Okay, does everybody see that? That was smart, whoever took that picture. That was smart. That was me all day. I took the pictures too. Okay, this is the general, this is what we're waiting for. Okay? Wait for the candle to break and close either above or below the level. Once closed, you're going to enter a buy or sell limit. This should be at. Buy or sell limit at the price of the line. So it breaks the line and then it closes, and then you put a buy limit at the line. Wait on price to come back to you. So price could be going up, up, up. So what? Wait till it comes back down for the retest. Wait on price to come to you on the retest. Okay? And pick up your order. And then you're going to get out at the very next level. This is the easiest way to trade this. Okay? Even if we're not even talking about consolidation, all that stuff yet. If you just trade zone to zone like this, you're going to be fine. You just saw you can get 100 pips just doing that. Okay? So now, Beverly, I want you to ask your question again and then tell me if you have the answer.
Okay. You said we get in right here. Okay. You're going up. It broke here. Then it retested twice. You put in your order on the red, and then you wait for it to go up.
You put in your order at the what?
On the candle, the bearish candle, the red one.
No, you're putting the bearish candle is not there.
Okay. So you put it in at the retest. Once it broke, you put it in on the next candle. And then you wait for it to take your order, and then you get out right here on the white line, right between the zone. Once it breaks, that's where you get out. So you put in a buy order right at 1.0. Where is it? 1.15193. I think that's where it is.
Hold on, Beverly. 1 second.
I can't see anything.
Hold on.
Okay.
Okay. Actually, hold on again. Let me put it at the one after that. Okay. This is what you would have normally seen on that, right? None of that other stuff even happened yet.
Okay.
So tell me what you're going to do. You see this happen, and you see that candle has closed above there. What are you going to do, Beverly?
Okay, then you wait for it to retest.
You're not waiting for anything. What are you going to do right at this point, Beverly? What do the rules say?
Put in your buy limit right there.
Right where?
Right where it closed above the line.
So you're going to so if you were going to put in a buy limit, what price would you put your buy limit in at?
At 1.15705. No. If I'm seeing it correctly.
Okay. Are you looking at, okay, on mine it says 5572. So maybe it looks like a 5.
Okay.
But yes, that's the correct line. Okay.
Yeah.
Now that you put your order in, Beverly, what are you going to do?
You're going to wait for it to retest and then take your order from there, and then you get if it's going to go up and close above the zone, which is at 1.16632, and that's where you get it out.
I think she's frozen.
Yeah.
Wait. Can you guys hear me?
Yeah.
Yes.
Okay. When you put in your trade, you're going to put in a take profit and a stop loss at the same time, aren't you?
Yes.
Okay. So you're going to put your buy limit at the 1.15572. Great. Where are you going to put your take profit at?
1.16632.
Correct. And now, where are you going to put your stop loss?
1.17000.
1 point what?
17000.
Your stop loss, Beverly? Your stop loss.
Okay.
Okay, so let me go back. You should know, Beverly, because we've been studying, okay? But I'm going to come back here.
Yeah.
All right?
Okay.
Okay. There. Now, let me add this in. Let's put this here. Let me put this right in here. 3. Put your stop loss 5 pips below or above the previous low or high. That would make that number 4. Actually, let's reverse these. Hold on, for the sake of chronology. Hold on. Okay. So I just kind of amended this, okay?
You
5 pips of the previous night. Oops. Uh-oh. Where did this come from? Somebody going on the screen?
Nope.
Where did this come from? Oh, thank you. All right. So now, Beverly.
Yes.
We're getting in at this line right here, right?
I'm not seeing it. Okay.
Do you see it?
Not yet.
You know the line we're getting in at, right? Right here.
Yeah. Okay. Yeah.
Okay. Actually, let me make that a yellow line because I kind of like my lines, my get in lines to be yellow. Okay, that's just. So we're getting in right there, right? Okay. And then you told me that we're gonna get out right here, right?
Yes.
We're getting out right there, right? So then technically, where would our stop loss be?
Okay, let me look at this again. What you just said, what you just wrote. So you said put in your stop loss pips, 5 pips above or below previous low high. So, okay, I'm lost.
So we're going in a buy, which means our stop loss would be under us.
Yeah.
Which means that we're looking to put our stop loss 5 pips below the low, the previous low, not the low of the whole chart. We're not doing that. We're the previous low. Where's the previous low at, Beverly?
Okay, I'm learning this thing. 1 point previous low.
Well, you don't have to give me a price. Just tell me where it is roughly. Where your yellow line is. So where we're getting in is the low?
No. The other zone down.
Here?
Yeah.
That's the low?
I don't know.
Somebody help Beverly out. Where's the low?
Thank you.
One more down where the wick is happening at, right there.
Correct.
Okay.
This would be the low.
5 pips below.
Okay.
Hold on, let me just stick this right here. Okay, that's the low. And then we want to go 5 pips below that. You guys see that? So just for the sake of it, I'm just going to move it down a little bit, okay? But do you see that that's where the low, you guys see that's the low, right? That's the previous low. It was no lower except for there. From where we are, the next low is right here. Does everybody see that?
Yes.
Yeah.
Yes.
Okay, so that's the previous low. Now, if you have your entry point, your take profit, your stop loss color coordinated, and you follow those rules, that could get you 100 pips, couldn't it?
Yeah.
But here is a problem. Can you get out here? Yes. But here is a problem. The problem is that you have a greater risk in a loss than you do in your gain upside. You see that?
Yes.
You see that going from where you got in, if you hit your stop loss, you would lose more than even if you hit your take profit. You would lose more than you gained, right?
Absolutely.
Yeah.
Do we want to do that?
No.
No.
We do not want to risk more than what we would gain, right? So if this is our low, what we would need to do is look to see, even though you could very easily get out right here, you would need to do 1 or 2 things. What are the 1 or 2 things you could do?
Move up, move up, move up.
Huh?
Raise your take profit.
You could raise your take profit.
Use a
Correct.
Fibonacci.
Well, let's not do a Fibonacci right now. Just off of just logic. What could you do?
Recess.
Less than your
Go to
stop
the
loss.
next slide.
Raise the stop loss.
You could raise the stop loss,
Yeah.
or you could do what? Raise the take profit.
Profit. Yep.
Come on, guys. That's like just common sense. That's all you could do because you're gonna get in right here. Why? Because Price told you that's what you should do. So you're not gonna change where you get in at. The only thing you could do to adjust your risk management is to either raise your take profit or raise your stop loss.
Tracy,
Yes.
when you first started out and you were using your hand gesture, I thought we were dealing with limits and not losses, stop losses.
A stop loss and a limit are 2 different things. I said we're not using stops, a buy stop or a sell stop. A stop loss is not the same thing as a buy stop or a sell stop. A stop loss is nothing more than if I'm getting in on a buy and price turns around and goes down in a sell, I'm not willing to go past this point anymore. If it comes down this far, take me out the trade. That's what a stop loss is. Stop me at my loss.
I understood that, but I guess when you put limits in there and you gave your explanation, we were doing a different technique.
Hey, this is vocabulary though, Phil. I need you to understand what I'm saying.
I understand the vocabulary. If I was confused about the vocabulary, I would take responsibility for that. So when you use limit in the beginning and you use the gestures and give the explanation, and then later on, we're not talking about limits anymore, we're talking about stop losses, then I get confused on what technique you use.
Okay, and Phil, I hear you, but I want you to make sure you hear me. I completely understand your question. And I totally understand that you believe that you understand the vocabulary. But I'm telling you, based on your question, you're mixing up the concepts on the vocabulary.
And the only reason I'm mixing it up because before you use a limit, I would have put the stop loss in there. because that's what I learned.
But a stop loss has nothing to do with the limit. A stop loss, you're going to have a stop loss in every trade you ever do.
I understand.
So the limit is the type of entry. The limit is the way that you get into the trade. A buy stop is the way that you get into the trade. A sell limit is the way that you get into a trade. A sell stop is a way that you get into a trade. A stop loss is how you get out of a trade. There's 5 ways you can get in a trade. You can either get in market execution, just boom, get in right now, whatever price is, get in right now. You can get in market execution. You can do a buy limit. You can do a sell limit. You can do a buy stop, or you could do a sell stop. Those are 5 ways to get into a trade. A stop loss has nothing to do with any of those stops over here in the ways that we get in. A stop loss is saying that if however I get in, if my trade goes the opposite direction of the way I intend for it to go, I'm only willing to go to this point. And this point is called a stop loss.
Which one of those 5 techniques is pricing involved in?
All of them, because trading is price. That's what we're trading, is the price. All of them.
I'll fix it.
Tracy. Can you hear me? This is Roger. She fell off. I think she dropped off again.
I think you're frozen, Tracy.
Yeah, looks like she's frozen again.
Yeah, she should be back.
Sorry, guys, the internet is unstable. Okay, hold on 1 second. Thank you. That's fine, like that. That's good. Thank you. Okay. So here, the line is here. If I want to get in and I believe, and price is down here, and I want to get in on a buy, and I'm going to anticipate that when price hits my line, it's going to keep going up, I would enter on a buy stop. I would get into the trade using a buy stop order. It's a pending order. I'm not in right now, like market execution. I'm going to wait, or I'm going to wait until price gets there. So it's all based on pricing. So I've got an order, but it doesn't trigger my order until price creeps itself up and touches my line. When price comes up and touches my line, it's going to grab my order. And then as long as price keeps going up, I'm going to be in the blue. That would be a buy stop, right? But the way we're learning how to trade is we're not going to do that. We're not going to put an order in before price gets there, because price could do a number of things, and we want to minimize our risk. So we're not going to have an order sitting here anticipating a continuous buy, because it could potentially turn around on us. So we're not going to put an order in at all when price is down here. We're going to wait until price actually comes up and crosses and closes. Now that price closes up here at this higher price, we're going to put in now what we call a buy limit at this lower price. Because now what we want is price to retest that line. It broke through our line, and we want it to come back and touch the line one time. When it comes back and touches the line one time, it's going to grab our order at the lower price, and then it's going to continue to go back up. Those are two different orders. Has nothing to do with the stop loss. These are just two different ways I could get into a buy. Either I can anticipate a buy, or I can wait for price to close above the line and take a buy on the retest. So two different ways to get in. One is a limit, one is a stop. But when I'm talking about a stop loss is the point that says, okay, I'm in my trade now. However I got in, I'm in my trade. And now the trade goes the opposite direction. So now I'm in my trade up here, right? It retested and it went up. But then something crazy happened, unbeknownst to us, and price went back down below my line. The stop loss says, listen, if you go backwards, I'm only willing to risk 20 pips, 30 pips, 40 pips, whatever, that comfort level is for you based on your lot size, right? Ideally, I'm only willing to risk $100. So if price comes back down and hits that price that you enter as your stop loss, you will automatically get kicked out of the trade at that loss. That's a stop loss.
Got it. Let me recap just shortly how I got it. There's two ways of getting into the trade. There's a limit.
5.
Well, the two that we're talking about right now, there are 5.
Yes, sir.
But the two that you just described where I got confused, you have a limit and you have a stop.
Correct.
But if you use the stop, you're putting yourself at a risk because the market, it vacillates so much.
Correct.
But if you use the limit, it has to go to a certain point, come back and retest. And then you enter the market once it begins to, if we sell it or buy it, it goes up.
Correct.
And to ensure that you protect yourself in risk analysis, you have to put a stop loss, whether you're in a buy market or a sell market.
Correct. You don't want the market to just go infinitely against you forever and blow your whole account. You just take me out if it goes this far past where I'm willing to lose.
I just got momentarily confused because I'm a newbie, just like my name.
Philip Newbie, I love it. Correct.
When we talk about a limit and a stop.
Yes.
And then later on, I heard a stop loss. Thank you. I got it.
You got it. Yes. So sometimes it's kind of like in the English language. Oh my goodness. Kind of like in the English language, you have different words that mean two different things, but they sound the same, right? Like there and there. Right? There meaning ownership of something. They own something, and there meaning a geographical location, right?
And that's the same thing I was going to use when I was trying to get clarity. I said, are you going to use a GPS magnetic north, or are you going to use a cardinal direction?
There you go.
Thank you.
You got it. Okay. Everybody with me on that. Okay. All right. So let's come back over here. Huh?
I have a question.
Yes, ma'am.
Okay. So when we were looking at the, basically when you said if your potential loss is greater than your potential profit, when you were talking about that, you said there were 2 things that you could raise. Could you repeat those 2 things that you said that you could raise?
Yes, you could. Let's go back to the chart so I can just show it to you, right? Because I want you to look at it and I want you to tell me. Okay, hold on. Okay. So we've got, let me move this 100 pip thing out the way. Okay. So you can see our green line is our take profit. Our red line is our stop loss. Our green line, our yellow line is where we got in, right? So if we wanted to minimize our risk, what could we do, Latara?
You can raise the take profit line.
You could do that, right? So in other words, if I took this line and put it up here, would that help even out our risk in this trade?
Yes.
Okay. So let's just say I didn't do that, but I could, right? Let's just say that, all right? So if I didn't do that, what could I do?
Well, I would think it would be the same in the other direction. You could, the stop loss line could come up closer.
Correct, right? Or I could move my stop loss up, right? I could move my stop loss up. Now, those are the options that you have. Everybody understand that? Those are the options that you have, okay? But here's where the issue comes in terms of let's break down which one would probably make more sense, okay? They're both options, but which one would make the most sense of the two, okay? It gives us the better chance to win. If the rule of thumb in trading is that you put your stop loss below the previous low, and let me help you understand why. Because price moves up and down, up and down, up and down, up and, like, for example, let's look at this right here. You see this right here? Price was down here, right? And then it moved up here. You guys with me? You see this up here? It moved here, right? We would have got in and we would have rolled this trade up to this next line right here, right? If we had to put a stop loss in, our previous low would have been right here. Everybody see that? The previous low would have been right here. If I were 5 pips below, let me just put another line right here. If I were 5 pips below this low, I don't know, let's just say like right there, okay? Then what happens is, price could turn around and come back down and hit my low. You see that? Now, in this particular example, we would have already gotten out the trade, okay? But I want you to think backwards. If we had our stop loss up here, right? Or let's say right here, right? Right here. And then this thing went up. It didn't hit our stop loss yet. I mean, it wouldn't have hit our take profit yet, but it turned around and came down around here. It would have taken us out the trade. Do y'all see that? We would have gotten kicked out the trade prematurely.
Correct.
Because it could have then continued to go back in our favor. So you don't want to arbitrarily put a stop loss somewhere just because it looked like you where you should put it. So you don't just stick it anywhere. You stick it 5 pips below the low, because what this is saying is that price has room to breathe, right? It can breathe anywhere above here and I'm still good. However, if price makes its way below this stop loss, now we look like we're having a trend reversal at that point. We have a reason why we're getting out. We're getting out because to go below the previous low means it's creating a lower low. What do we have when we have lower lows? What kind of trend is that?
Downtrend.
A downtrend. And aren't we in a buy?
Yes.
Yes.
So if we're in a buy and then price comes down and creates a lower low, that might be a clue we're going the wrong direction.
Yes, ma'am.
You guys with me?
Yes.
Yes.
This is a low. If it creates a lower low, then we're going the wrong direction. So the stop loss being at this point gives us enough room to breathe, because it can still come down and go up and come down and go up. But if it's going to go below that, if it breaks our previous low, it created a new low. And to create a new low means that it probably is going to start going down. And if we're going up, we're losing. So we're saying that, okay, look, we believe that it's going to go up, but if it creates a lower low, take me out of my buy, because I don't want to just lose infinitely. Take me out of my buy, and now at least I can minimize that loss. I can come back, I can reassess, and maybe now I'm going to find an entry point to get in on a sale.
Yeah, I have a question, Tracy. On
Okay,
that.
wait, hold on 1 second, Roger.
Sure.
1 second. Latara, does that make sense?
It does make sense. So in the previous example then, with the first green, yellow, and red line, with the stop loss being where it is, rather than raise the stop loss, you would have raised the profit?
I would.
Okay.
I would. So now what would happen is, all right, the ideal scenario, guys, right, for easiest take profit is the next zone. But if I'm looking in totality, that wouldn't make the best sense, right? So then that would mean I would do better to at least bring my take profit up to the previous level of consolidation. Do you guys see that this is consolidation right here?
Yes.
I see.
Right? This is consolidation right here. So if I'm going up, I want my take profit to be at the top of the consolidation, which is like right around here. See this area? It's around there. Right? So basically the next zone. Basically the next zone. You see that?
Yes.
Okay? That would be the next safest place. And even safer place, that this is just risk management. Okay? This doesn't mean you have to do this. It's if you're going to consider risk management. But you could be like, I could be confident enough in my trade where I don't think it's going to hit the stop loss anyway. You guys understand what I'm saying? I could be confident enough in my trade, in my strategy, that I don't believe it's going to hit the stop loss. So I could very easily keep my take profit right here because I believe I have a greater chance of hitting here before it came down here anyway. You guys understand? But if I'm just looking at it, this has a greater risk than reward.
Correct.
But if I'm confident, it's like this. If you're crossing the street at your age right now, you could see a car coming from down the street, and with your experience, you could gauge how fast you could get across that street before that car came and hit you, right? That's experience. I can't tell my 4-year-old to assess that speed of that car and the distance of the car. I'm going to tell the 4-year-old, wait till there's 0 cars. Right? Does that mean that you can't cross the street? No, it just means with your experience, you're more confident that if the light is yellow, you could probably make it across before another car came by and collided with you. Your experience tells you that. So what I'm saying is that as you do this, my experience might tell me, I believe that this is going to hit this line before a car comes down and crashes this red line. If I have confidence in that, I might be okay with the stop loss being down there because my stop loss is following the structure. Okay? But if you're not that confident in it, then you would want to raise your stop loss. I mean, you would want to raise your, what's this called? Your take profit to a point where you have a greater or at least a 1-to-1, an even type of risk to reward. You guys understand what I'm saying? It's an art to a certain extent. The science of it is, hold on, yes. Okay. So risk management wise, I would rather have greater reward than risk. Everybody agree?
I agree.
Yes. Okay. Huh?
Yes.
Somebody say I guess, or you say yes?
Yes.
I definitely agree.
Okay, all right. So this is the way we would prefer it to be. But then you got to look at what's going on. Okay, well, what happened? Well, the last time price was at this level right here, if I look left, what did price do the last time it was at this line? What did it do, guys?
It dropped.
It dropped. So now, do I want to push past a point where the last time it dropped, or do I want to just go ahead and take my money right here?
Take the profit.
My profit right there.
I'll probably just take my money right here. So even though I have a greater risk, my confidence in my reward is high.
Mm-hmm.
But that's a choice that's a decision you have to make. But I want you to understand that you do have a choice. You have a choice. And you have to analyze what decision you're going to make. But based on risk management, I would be risking more if I lost the trade than what I would have gained if I won the trade. But I'm so confident that I'm going to win the trade based on my analysis, based on it's already hit this trend line, right? The likelihood it's going to come down and break that trend line is slim, right? And I've already had a rally up. I've closed above two zones, right? This zone and this zone, right? If it comes down and it retests and goes up, the likelihood that this thing is going to turn around and come down wouldn't happen until when?
It breaks.
The likelihood that it turns around and comes down wouldn't happen until when?
You hit your take profit.
Until it hit this take profit. Why? Because of what previous price told me it was going to do.
Mm-hmm.
And isn't this a supply zone right here?
Yes.
Yes.
So do you guys see what I'm saying?
That's it.
So I'm confident going from here to here. I'm not that confident going from here to here.
Yeah.
Because from here to here, we got last time price was here, we went up. Last time price was here, we went up. You guys see what I'm saying? We was fine. But every time I hit up here, I dropped. And it's a supply zone. I'm not going to keep buying when I can see the bank just said, hello, McFly, we just sold off. I'm going to wait. So I'm going to get my bag right here. I'm going to wait. So even if it does come down to this line, the way I'm processing this is, if it does, it won't until after this. So I can take the ride from here to here, get the bag, and then chill. Then my stop loss ain't even right there no more anyway, because I'm not in a trade.
How many pips is that, Tracy?
Okay, let's see. So from this line to this line is like 185 pips.
Woo!
Yes, sir.
Okay. Oh, man.
You guys see what I'm saying?
Yes, ma'am.
Okay.
Shoot.
So that's how we get in. We get in on a break and a retest. A break and a retest. No retest, no entry. No retest, no entry. No retest, no entry. Okay? All right. Everybody got that?
Yep. Yes.
Okay. So ideally, we're going to go to the next zone. Okay? That would be number one. Go to the next zone. If the next zone, you feel a certain type of way about the next zone or whatever, you could do or previous level of consolidation, which is what I just showed you guys. Right? Can I just show you that?
Yes.
Okay, I just said you could get in right here. You could go to the very next line. That's 100 pips. That's fine. Get your 100 pips and be out. Mm-hmm. Or if you want to follow more structure tells us that price came at least to here before it turned around. This is the previous level of consolidation. You're going to take profit at the top of this consolidation on a buy. If we were in a sale, we would, like right here, let's say we were up here and we were coming down in a sale, we would take profit at the bottom of the previous level of consolidation over here. Y'all see that? If we got in up here on a sale, where did we get out? A, we get off at the next line. Or we could get out at the previous level of consolidation. At the bottom over here, this line, either would have done fine. Either would have gotten you your money. Do you see that?
Yes.
You get to decide. That's why sometimes you'll see take profit 1, take profit 2, and take profit 3. Because there's multiple places you could get in or get out at. It just depends on what your account size is, what your trading plan says, what your PIP goal is, what your dollar amount is. It's not, it depends on you at that point. Where? But could you here? Yes. Could you here? Yes. Could you here? I wouldn't. Why? Because of consolidation, structure, and supply. I would not go further than that line. I would get out at the line and be done. Okay?
Got it.
That makes sense. Yep.
Okay. That's how we're getting in, and that's how we're getting out. Does everybody understand how we get in and where we get out?
Yes.
Yes. Yes, ma'am.
Absolutely.
So when you get in a trade, you should already know where you're getting out. The analysis should, when you say, okay, look, I'm gonna wait for this thing to break this level. If it comes back here, retest, I'm gonna jump in. And if I jump in here, I'm gonna get out here. You need to have that whole conversation in your head before you go to your phone on MT4 and enter a trade. You have to understand? You gotta have that whole you gotta know your exit strategy when you get in. That's why you're going to have a stop loss below the low, and you're going to have a take profit. Those are 2 exit plans. Gotcha. Either you're going to get out with money or you're going to get out with a loss. But you got a plan to get out. And you got a plan on when you're going to get in, and you have a reason why you're getting in right there. You have a reason why you're getting out right there. And if you hit your stop loss, there's a reason why it hit your stop loss, because it created a lower low. And you don't need to be in a buy anyway if it did that. Y'all with me?
Yep.
Okay, let me stop sharing this. Any more questions on that?
Okay, Tracy, I know this might be off the wall. So this basically stops us from doing trailing stop losses all day.
This doesn't stop you from doing trailing stop losses. Okay. This allows you, you're gonna only do trailing stop losses when you're in a trend.
Got you.
So for example, like you gotta know when you're in a trend, right? Hold on. Okay. Now, where we are right here, I don't know if I'm really in a full-blown trend. Why? Because, hold on. Because in real life, the trend started down here, didn't it?
Yes.
So if I get in, this is what I mean about the demand zone. Remember, what did I say at the very beginning? If you get in at the demand zone, you can bet your bottom dollar that your take profit is going to be where?
Up.
Up where?
To the next.
To where?
To the next higher high.
Somebody said it.
Supply zone.
Correct.
Oh, right.
If I get in at the demand zone, I can ride it up to the supply zone.
Okay.
Yes. No. Okay. If I get in at the demand zone, I can ride it up to the supply zone. So if I'm getting in at the demand zone, I'm probably at the beginning of a trend.
Okay. Gotcha.
Now I can do trailing stop losses because I'm going up. I'm creating higher highs. Right? I'm creating higher highs. And I can move my stop loss up as I keep going, and I'm riding to where? The supply zone. Once I hit my supply zone, I'm out. But right here, I'm not at a demand zone, am I?
No, you're in the middle.
I don't know where this thing could potentially turn around and do whatever. I'm not really in a trend, right? Like this is not riding of a trend right here. Why? Because hold on. Because I've got a trend line right here coming down on top of my head.
Mm-hmm.
Where I'm going. Now, if you wanted to, you could do that, but I've got this structure over here that's telling me it's turning around.
Yes,
So if I got in right here, Sheree, for example, the yellow line, and then I got up here, right, and then I moved my stop loss up in front of my entry point, right, trailing stop loss, and then price turned around because of this, came down and hit my trend line,
knocked out.
You just lost all that profit that you would have had.
Absolutely.
Because you don't know if it's creating higher highs.
Gotcha.
Question, Tracy.
Yes.
If you got in at the demand zone, would you stay in the trade, or you would still trade it zone to zone all the way up to the supply?
The ideal scenario, if you get in at a demand zone, is you trade zone to zone, but you don't get out. In other words, I would go, this would be my, okay, so we had our retest. Hold on, let me zoom in. We had our retest.
So at every retest, you would add in another.
There you go. Every time I broke another zone, I would add another position.
Yes, man.
So I'm still trading zone to zone, but I'm not getting out. I'm just getting in again.
Okay, so you'll ride it through the weekend and the whole night.
Yeah, if you're going to trend trade, you're going to have to ride through the weekend because these are all these days. Absolutely. Okay. Right? So, okay, fine. I get in here. Boom. This is so right here. Boom. I get in on my retest here. Right? Okay, great. So I'm going to ride this thing up. I'm going to ride all these levels because I'm at the demand zone. That's the reason why I wouldn't get out right here or right here or right here or I'm going to stay in. But I'm looking left. Right? I'm looking left. So I can see that more than likely when price got to be around this area, it was going to turn around and go back down again. You see that?
Right.
But if I'm in an uptrend, I'm creating higher lows as well, aren't I?
Yes.
So I should not go all the way back down to where I got in at.
Right.
I should create a higher low. So boom, here, I'm looking left. I'm like, okay, where might this thing come down to? Previous level of consolidation right here. I would probably enter in a buy limit right there at this line. It's going to consolidate for a little bit, right? And then boom, there's your second push up. So now I'm in the trade from here and I'm in the trade from this next. So I got a trade in at this zone and a trade in at this zone. I got two trades in now. Now where am I going to go? Well, I'm going to keep going at least to this same area again, right? Because it's going to have to break through and retest before I can see anything else.
Gotcha.
Right? So here, okay, fine, we broke through. You could have got in right here. Now it would have pulled you down a little bit, but we're creating higher lows.
Yes.
So you shouldn't go past where you got in before.
Right.
Right? Okay, if I look left, okay, where'd this thing come down to? Or right about the same thing again. But it didn't come all the way down there. Great. So now we've got the weekend. Then what did it do? It gapped up when the market opened. Boom, you in profit. On now a third position. Right? And so you can trend trade this. And if you wanted to keep moving your stop loss up, you would just move your stop loss up to the last level of consolidation, the lowest level of consolidation. Because you're creating higher lows. So what you're saying is, I don't expect price to come below this low because I'm going up. Up means higher lows.
Yes.
So I can put the stop loss right here and be safe, or at least be, certain or be confident that it's not going to break that stop loss. If it breaks my stop loss area, anyway. Now like we're having a trend reversal. or something, right? But I got a trend line here, don't I? Well, I do now. I wouldn't have had this trend line at the beginning,
Right here.
right? Because we touched the point way over there. But at this point, let's just say if we are at this point, this trend line would have been something like this, right? Because we would have had 2 points already.
Yeah, right.
Right? We would have had 2 points already. When this hit right here,
Yes.
when this happened right here, that was our second point. 1, 2, go straight through. We could have drew a trend line right there. And now I can see it's hitting this trend line, right? Now here's the thing. The further away price is from the trend line, the stronger the trend. So now you can see this line, and now you putting in a position right here, and it's getting further away from that trend line. You put in a position right here, right? And you keep doing that up until you get to your supply zone.
So that's basically what Dr. Spiller did when you did that interview with him at the hotel. This is how he was doing that trend and made that $200-something thousand in 5 months, right?
Correct.
Okay.
It was trend trading. But the lesson that we learned, or that I learned from listening to him, and the lesson that he learned that he talked about in the video, was when he was putting in his positions, he was putting in the same lot size. So he got in here, let's say a standard. He turned around, he got in a second position at a standard. He came here at another standard. Came here, another standard. He had like 30-something positions open on that whole trade. Okay. But what he said he didn't know then, that he knew at the point of that video, was he could put a higher lot size in at every position. So instead of putting a standard, he could come in at a standard, it retest, he could put a standard and a half. Right. It retest again, he could put in 2 standards. It retest again, you see what I'm saying? 2.5. It retest again, 3 standards, right? It retest, because now you got all this equity in your account.
My.
So he could have, that's why he talks about how, had he known that, instead of making $300-some thousand, he possibly could have been close to $1 million had he just known that.
Right. Wow.
Okay? Wow. Does that make sense, Michael?
Yes, ma'am, it does.
Does that make sense for everybody else too?
Absolutely.
Yes, it does.
Yes, ma'am.
Okay.
Yes.
So let me come back over here to current price, right? And now I'm going to put this thing out the way. Now I'm going to hit this play. I'm going to move this stop loss down back to where it was down here. And I'm going to move this price up like this so we can see it. And now I'm going to hit the play button so we can see what price did. Okay, so we would have got in here, we would have got out there, and our stop loss would have been down there. Let's see what happened. Boom. Hit our take profit. Y'all see that?
Yeah.
Yes.
And then it came back down.
Yeah.
It didn't do exactly what I said. I said it wasn't going to come back down until it at least hit this same area again.
Mm-hmm.
Right? I felt safe coming from here to here. I don't feel safe going from here up here.
Wow.
Because the previous consolidation told me last time it was here, it dropped. Last time it was here, it didn't break, it dropped. So next time it comes up here, it went up a little bit. It could have faked out some folk, right? But that's because they're not really here. Like, I'm like, nah, this is supply. This is supply.
Tracy, on that, go back to where it almost wicked up to the take profit.
Oh, right here?
Yeah, I believe I was in that same trade.
Yeah.
And people, it's important that you make sure that you have your lines at the beginning marked off correctly because it didn't hit my take profit right at that point.
Mm-hmm.
And then I got that red candle going down, and then the start of that second red candle going down, I got out of the trade.
Why you get out?
Because I didn't have my lines properly on here. So I figured I messed up and I didn't want to lose anymore. But it was actually a couple days later, I guess. Obviously, no, this wasn't even August the 27th. No, it wasn't this. It was one similar to this. And so I got out early because I didn't have it marked off right. And then it ended up eventually jumping up and hitting my take profit. And that was all because I didn't have a line where I needed to have it.
Yeah. Well, sometimes it will happen where like this, you're here. I mean, the line is here, but you know, they didn't go up there. Like all these other times that hit the line and hit the line and hit the line. And then, you know, it didn't hit the line. So that's what happens. You get nervous, you get out. But this is what I mean about confidence.
Right.
Right? Your confidence with it. Like, look, right? I'm confident that it's going to do that. Because all it did was come back up here and retest again. That's all it did, right? So we saw this move. We got it on this retest. But then what is this right here? What is this pattern right there, Michael?
Where you pointing at?
Engulfing. Like an engulfing. Bullish engulfing.
Hold on. Where is this at? Where is it? We got in here. We came down. Wait a minute. When I was zoomed out, hold on.
That's an invert head and shoulders, right?
Oh, right here. Here it is. Here it is. Let me go back.
Up here, there's an engulfing candle there.
Right. So see, this is where we would have. It broke right here. Right. We got in on our line right here, right? Then it came down, created this red candle, turned around, created that green candle. These two candles formed a what?
The one they call
bullish engulfing.
Engulfing.
That's engulfing right there.
Oh, bullish engulfing. Bullish engulfing for me is confirmation we still going up.
Mm-hmm.
You see what I'm saying? You got to read your candles. So even if it came all the way up here, wicked and didn't hit, don't get out. Your stop loss is down here. You still good as long as we don't create a lower low.
Gotcha.
So then, even if I was nervous though, and now this thing comes back down, I'm back black and red, right? Because now I'd gained all of this, and I came back. This bullish engulfing means I'm gonna have to retest that line again, doesn't it?
Yes.
Do you see what I'm saying? So if I broke through with a bullish engulfing, now I'm gonna come back retest. When I saw that, I'm like, oh shit, it's gonna have to come back and retest.
Mm-hmm.
Right? So I'm prepared for the retest. So then, if anything, get in again. Don't get out, get in again.
Right.
So we wanted it to hit right here and go straight up, but it said, no, let me come back and retest this bullish.
Okay.
Engulf it. Let me retest that. It came down, it retested it. You got in again. What happened? Straight to the moon, straight up. Right?
Like the young folk now, I'm Gucci now. I'm Gucci.
You say what?
I'm Gucci.
Wait, I can't hear you. Say it again.
I said I'm Gucci. That's what the young folks say. I'm
oh,
good.
That's right. You Gucci now, right?
Yeah.
So you got to keep an eye on the patterns, though, right? So if I see this bullish engulfing, I'm confident again.
Okay.
Even if it start doing this, I see this. I'm like, oh, well, shoot, what is it going to do? It's going to retest this. Okay, great. I'm not going to get worried unless we start moving past this.
Mm-hmm. Right.
But it didn't move that much past this until after we hit this. I'm confident in this structure, price action, previous level consolidation. I'm confident in that. That's what I'm saying about this. I'm not really worried about this so much, the stop loss, because I see this. I'm like, nah, I'm going to stay in it because I'm good, right? Now, if I lose, I just lose, but I'm going to lose after I at least attempt to get here because structure told me to get there.
Mm-hmm.
And if I go to any educator, I go to any master trader, and I say, oh, my God, I lost my trade. And they say, well, show me what you were thinking. Show me what you had. And I showed them this. They can't be mad at me.
Mm-hmm.
Right.
They can't be mad because I followed structure. The market might have just did something stupid, but I followed structure.
I got another question, too.
Hold on, side. Hold on.
I have a question, Tracy.
Okay, go ahead. I'm listening.
Okay. The next point. See, I see the engulfing.
Uh-oh, I can't hear you that good.
Okay, the engulfing candle.
Yeah.
The bullish engulfing candle. If you go to the next one over, where that.
Hold on 1 second.
Okay.
Hold on. Okay, I'm sorry about that. Okay, go for it.
Okay, the bullish engulfing candle, right? Oh, right there. Okay, if we go over to the right, see that bearish engulfing candle right next to the long red one next to the short green. Oh, right there,
here?
right there. Is that?
That is not a bullet. What did I tell
That's
you
a
the
bearish.
definition of
That's
an
a
engulfing
bearish.
candle is?
That's a bearish engulfing, correct?
What did I tell you the definition of a bearish engulfing candle was?
When it can fit inside that candle can fit inside the body of that candle.
Okay.
That green candle can fit inside of that red candle, right?
Hold on 1 second. Let me zoom in. Okay.
Not even.
Okay. Now we're talking about this candle right here, right?
Yes. Now, okay, you can't go. Okay, so you're only looking at if that was green and the red fitting inside of that. You can't go the opposite. You can't say if the green candle could fit inside that red body. The body of that red candle.
Okay. Are you're talking about this candle?
Correct. And the
only candle that we're even talking about is the previous candle.
Okay, I got you. Okay.
This cannot even happen yet.
Right. Okay.
Right? So this is not bearish engulfing. Why is this not bearish engulfing?
Because it has to be the candle before it.
Well, this is the candle before it. But why is this not bearish engulfing?
Because it's not this.
It's not big enough.
Number one is the same color.
Oh, I got you. Okay, same color.
And number two is because of what?
It's not big enough.
This candle does not fit inside that candle. This candle is outside this candle.
Okay.
Guys.
Okay.
That candle is not inside that candle, is it?
No.
The candle is outside the candle.
Okay.
This candle is not inside the body of this candle. This candle is above the body of this candle.
I got you. Okay.
This is not a bearish engulfing. Just because it's a big candle doesn't mean that it's engulfing. It must follow the rule of what engulfing is, guys, okay?
Correct. Okay.
You got it?
Yep.
Okay. So, correct. So once I saw this, right? So we got in right here. It picked up our order. We went down negative. Okay, great. I came up and I closed above. I saw this. I'm like, oh, we Gucci. Mm-hmm. Right? Now, of course, during this time, I'm thinking we almost at take profit. So to get to all the way up there, almost make it and it not make it and it come down and turn around, I'm still looking at the bullish engulfing. And I'm saying, okay, it's probably going to test this bullish engulfing, which it did once, twice, right? And it came down a third time. Good Lord. But then we finally came on back up. This is why if we got in right here, this is 1, 2, 3, 4, 5, 6, 7, 8. Right? 8 days, 9 days. I see this, I'm gonna put another order in at this line. Why? To help make up for all this dang on time I didn't get no money. Right? It's like time versus money, right? Okay, you're gonna do all of this to be back at zero? To be back at zero. After 9 days, you're gonna be back at zero. You see this bullish engulfing, you put another order in right here. You now add 2 orders in. You're going to double up on your way up this time. So now you're going to make up for that lost time with that second order because you got 2 orders at the same line.
Talk about it.
Okay. Wow, I got you.
You guys see what I'm saying?
Yep.
If you're going to wait all this time and it's going to come back and retest, then why not put another order in on this retest when you got this bullish engulfing that is retesting? Put a second order in here at a higher lot size, maybe, if you can. Depends on your account size. But put a higher lot. So this might be, let's say, 0.01. This might be 0.02. Right? So now you would have only made, what was it, 183 pips? You would have only made, what, $18 initially. But if I put a 02 here, not only am I going to make the initial $18 that came up, but now I'm going to make an additional $36 when it came up. Do y'all see that?
That's it.
Yeah.
So now I got 36 plus 18. How much is that?
Long time for 54.
54, right? So for my time, instead of making $18, for my time, I would have made $54.
So,
same trade. I'm not getting out. I'm not all over the currency market trying to get in and out of 100,000 pairs. I'm just watching this one and say, okay, bullish. Okay, great. Come down. Shit. I'm going to go ahead and double up, or I'm going to do a higher lot size because I need to make up for all this. I had equity right here. It took me out of my equity. So now you got to pay me for my time. I'm going to get my initial equity and I'm going to double up on that second time. $54 for the same trade. This is why I don't like people to talk about how much money they made. Because it doesn't matter how much money you made. A person that made $18 on this trade is good enough, same skill as a person that made the $54 on the trade. Same number of pips. It's just a $54 person been around long enough to know I'm going to put in a second position. But the skill of getting in and getting out is the same. The pips, right? That's what it is. Don't tell me about how much money you made. Show me how many pips you caught consistently you can do.
Tracy, I got a question.
Yes, sir.
I'm not clear on why you were getting that second trader. Can you explain that to me once again, please?
Because it retested.
Okay.
The bullish engulfing candle is like a demand zone, isn't it?
Yes.
So if it's like a demand zone, if it breaks out, I'm expecting it to do what, Johnny?
Retest again.
Correct. So that's why I would have got in again.
Okay. Makes sense.
Yeah, guys, you just have to keep pulling all of your concepts together. Okay, pull all of your concepts together. Don't forget that a bullish engulfing is a bullish engulfing. Don't just ignore it when you can identify them. It might not be a demand zone, like the demand zone, but that is an area where banks were pushing the price up. And it went from where? It went from that demand zone to where? The very next supply zone, didn't it? Y'all saw that? You saw the supply that was to the left. It went from the demand to the supply, the little small demand and supply zone. It went right between it. If you get out of demand zone, bet your bottom dollar you can ride it to the supply zone. Y'all with me?
Yes.
Okay. So that's all we're going to go over this workshop.
Comment.
Okay. I think that was enough. Do you guys think that's enough?
A whole enough.
Hey, Oh yeah.
A whole lot. Definitely.
Okay?
It
If
was
we
worth it though.
practice this over and over and don't get confused with everybody's strategy of fast and hurry up and I made this and you're getting all wrapped up in what other people are doing, you will lose what you're supposed to be doing.
Patience.
And you will be starting over every month because you will not have focus. And as you can see, Luke, trade support resistance. Gustavo, trades support resistance. Kurt, trade support resistance, but he's leveraging other indicators with it. He's still trading support resistance. You guys see that?
Yes.
Oren trades support resistance, supply demand.
Yeah.
This is what your major price action naked traders are doing. I don't care. Christopher Derrick trades just like this. You guys understand? You can go watch Christopher Derrick, you're going to reinforce. You go watch Oren, you're going to reinforce. You go watch Stevenson, you're going to reinforce. You go watch several of the price action naked traders, traders, they're going to trade like this. It's just going to reinforce what we're doing. If you start jumping around and now you're going to start doing other strategies, then you've got to be able to decompartmentalize the information. This is over here and that is over here. You cannot bring the two together and confuse the living life out of yourself. Just if you're going to drive two different cars, drive two different cars. Don't get in your white car and your black car at the same time, try to drive at the same time and wonder why you're having a hard time. You don't do that. If you're going to drive the white car, drive the white car. And today, if you're going to drive the black car, drive the black car. Same time, not a good idea. Not a good idea, especially for creating neural pathways in your brain, right? A neural pathway is through repetition. It's you walk along a path in your brain until it has no more grass right there, right? And it's a path. Like, you know what I'm talking about? You walk across the grass. So many people say, get off my grass. Why do they get off their grass? Because they don't want you making a path on their grass. But what we are doing is we do want to make a path in the grass of our brain with one strategy, one technique. It's not really a strategy, but one overall process that as long as we keep walking up and down this path, it's being reinforced. We get better. It becomes habit to trade like this. You can't help but identify a trend. You won't be able to help but identify a bullish or bearish engulfing. You won't be able to help but identify a supply zone or a demand zone. You won't be able to help it. And that's why certain people trade. You heard Luke say, I just trade like this. I don't even know what Fibonacci is. Why? Because he don't care what Fibonacci is. His strategy does not require Fibonacci. So why would he take all of his time outside of perfecting what he's doing to go learn Fibonacci? Like with you, we've been spending a lot of time learning this strategy. Why would you want to just forfeit all of this to turn around and go learn something that you think is the grass is going to be greener? No, they're mowing their lawns just like we're mowing our lawns. Repetition, 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 repetition. Keep practicing and practicing and practicing and practicing. Get on our workshops Monday, Wednesday, Friday. You cannot not get on the workshop and then a month later think I'm going to be happy about answering your question about supply demand. You got to have a different question a month from now. You cannot have the same question that you have today because that lets me know you have not even made an effort. I'm not even going to say try because that's not even valid. You have not made an effort to get good through repetition. Okay?
Tracy, you told me to stop making excuses.
That's right, Johnny. No more. That's it. Either we're gonna make money or we're gonna make excuses. We can't do both, my friend. All right. So hold on, guys. We're gonna go ahead and close out this session. And everybody should be good from here. Practice, practice, practice.
Thank you,
Thank
Tracy.
you, Tracy.
Thank you, Tracy, again.
Okay.
Thank you, Tracy.
Guys, I have to
Appreciate it.
stop the recording. You guys are absolutely welcome. You guys are absolutely welcome.
Appreciate it.
I'll put this in the play. Monica says, Rick says he appreciates it. I'm a student always, Sharon.
Thank you.
Roger say everything is crystal clear. Rolanda says makes sense. Edna says many thanks. Each workshop you pick up new nuggets. Teresa, great workshop. Okay, you guys get it. Thank you. I believe that you're getting it. Okay. Now, the best thing you can do is practice this in your demos. Practice this in your demo. Okay? Start identifying the setups. Start seeing the break. Get in on the retest. Go to the next zone or go to the previous level of consolidation. That's all you're doing. That's all you're doing. Anything other than that is going to confuse you, and you don't have to be confused. That's the rule. It breaks, you get in on the retest. Where do you get out? The next zone or previous level of consolidation. That's it. That's the secret to getting in and getting out. Practice seeing it, and then it will be just as easy to do it as it is to say it. Okay?
Gotcha.
Good. All right. Anything else y'all want to say before we close out and get out of here?
Well done, once again. Always a student.
Always a student.
Yay. Breakthrough is, John Jesse said breakthrough. All right. Jesse, that's practice. Phyllis say thank you, newbie. Phyllis tried to give me a hard time today, but that's okay. I love it. Okay? So maybe I have to fight you, Phil.
Never give you a hard time.
How do I get access to demos? Latara, demo is a demo account. When you set up your traders, your brokerage account, you have to set up a demo account. That's how you get access. So in other words, go through, you just got enrolled. So you want to go through your fast start in IML, okay? Go through that, and that's how you get demo account through your broker, all right? So that being said, I love you guys. I appreciate you guys. Listen, would you guys do me a favor? If you have not done a testimonial for this course yet, okay, a lot of you guys have, and I appreciate it. You guys have been, you're in the sales video and everything. But if you have not done a testimonial for this class, would you please record a video testimonial for me? Please, so we can, it's not really for me, it's just really because I want people to see that they can learn this. They can learn this. And if they, but if they can hear different people, different backgrounds, different sizes, different colors, different areas of the country or the world, if they can hear and see different people saying that they're getting it, you don't have to have made $1 million to say I'm understanding it, or it's making sense, or now I'm further along than I was yesterday. You don't need any dollar amount to validate your progress, okay? I want people to be able to see that, all right? So what I'm gonna do really quickly is, hold on guys, I'm trying to see why I can't get back up to this, hold on. See why this thing won't let me get back to my, it says private, hold on. I'm trying to type, hold on, for whatever reason, Monica, it won't let me get off of you on the private chat. Hold on 1 second. Okay, what I'm gonna do is, let's see. Lamar, because for whatever reason, I can pick different people, it won't let me get out and get back to everyone. I am going to copy and paste the format for a testimonial to you. And if you could copy and paste that to everyone, okay? So give me 2 seconds. Okay. Let me get over here and let me get it. And I'm gonna paste it. And so guys, the reason why I'm gonna share this with you is because testimonials are very, very important. But the key to the testimonial is that you don't get all off on a tangent and lose the person because you didn't forget what you started talking about. Okay? So the whole point of the testimonial framework is to keep your thoughts and your words in sync such that you can say what you have to say in less than a minute. Okay? In less than a minute. Everybody that's done a testimonial is less than a minute with this format. Okay? Hold on, let me get it. While I'm working on that, hold on. Let me see. Okay, here it is. I'm gonna paste this for Lamar. I need to edit a little bit. Hold on. Okay, hold on. Okay, there we go, Lamar. So I just sent it to Lamar. Lamar's gonna copy and paste it for all of you guys into the everyone, okay? And here's the gist of it. Hey, my name is Tracy Walker, and I'm from Atlanta, Georgia. And prior to attending the NBA Live Trading Workshop, I really struggled with knowing how to get into the trade or how to get out. I was totally confused. It made no sense to me. But as a result of coming to the workshop and actually, figuring and learning how to mark up my chart the right way, now I'm able to get in with precision. I know exactly what to look for to get out, and I don't have to really, I can trade with confidence. So if you're ready to know how to get in and out with precision, and you want to start trading with confidence, I highly recommend that you get the NBA Live Trading Workshop video course, or get to a live workshop right away. Right? That's the gist. You plug in what your problem and your solution is. Okay, but that's the format. Everybody with me? You can practice it, whatever. Here's what I would like for you to do. Do a video testimonial using that format, upload the video to YouTube, and then just send me the YouTube link. Send me the YouTube link. Don't send me the video because it's harder for me to get it like that, right? Send me the YouTube link, and then I can get them from there. Will you guys do me some testimonials, please? Please, who's gonna do one? Who's gonna do one for me?
I got you, Tracy. It's gonna be good.
Thank you. Oh, and do not make the video public unlisted. Make it unlisted. Don't make it private. If you make it private, I can't see it either. But if you make it unlisted, then anybody you share the link with can still see it. But people just on YouTube searching for it can't see it. Okay? So make it unlisted, record it, put it on YouTube. You can inbox me the link on Facebook, and I will start sharing them quickly. All right. I'm gonna work on this video and the other ones. I'm gonna try to get them up into our site by tomorrow. Okay, so you guys can come back and start revisiting virtual trading summit as well as this stuff. And I'm gonna try to do these once a month, a live version once a month. Okay, reinforcement. And so you'll want to make sure that you're taking this and sharing it with your teams. When I say share with your team, I mean the knowledge, right? If you can teach it to your group and start sharing it with them, start doing that so that you can bring them along. If you have a group. If you don't have a group, it doesn't really matter. But if you do and you want to share some stuff with them, bring them along the journey with you. Don't wait till you $5 million and then try to come back and get everybody. Just bring them along the journey, okay? Can you let me see your chart again? I want a screenshot. Okay. Hold on 1 second. Let me come back to the chart. And then let me come out of this. And let me do screen again. Euro USD. Share. All right. I need to probably zoom out some too so you can get more of it. Patrick, you good? Over here. Patrick is over here. Eric left already. But Patrick is good. Okay. What I'm gonna do is I'm gonna go to I'm gonna go to the real fast, before we do anything. Looking at what's happening right now, what would you guys be expecting to happen? Euro USD.
Price moving up.
Up and retest that line, trend line. Make a hit.
Okay. What would y'all be expecting to happen?
Touch that trend line.
Huh?
Another touch of that trend line, maybe for a test, and then see it bounce back off.
Okay, but we not going that direction, are we?
No.
We could be, but I mean, okay, just put it like this. What are the two options that you have at this point?
Go back up. Keep going up to that next zone.
So it could do.
Retest the zone.
You either put a sell limit at the yellow line.
Yeah.
Write it down to the white line below it.
Sell limit.
Right? Why? Does everybody see why he said that?
Yes.
Because it's going to retest it.
Okay. Because what did we do? We came down, we broke this zone, didn't we?
Yep, to retest it.
Tracy, I was looking at the previous level of consolidation as well. If you go back to your left. I think she froze.
Yeah, I think she did. Yeah, I thought it was me. Yeah. So go ahead with your thought though, man. Why she's frozen? What was you saying? You saying look at the.
Well, she would have to go further left. I saw a little level of consolidation.
Okay.
But her computer's frozen, so.
Okay.
While she's out, a couple of you gentlemen asked the question at the beginning. The value of this is my very first one on the MBA. But coming into it, it was a no-brainer to make the investment. And since we've been in here today, I can tell you, MBA stand for me is much better association with the concepts that I was learning in the back office of the IML. You can't be a hand-holding coach and supposed to trying to do it on your own. It's like trying to learn a martial arts from a videotape. Have an instructor really tell you how to make a shift, how to do a real block with power and precision. You just don't get that from a video or reading a book.
Yeah.
And the same thing with trade. I went in the back office and got some understanding and went through all the modules. What she brought up today crystallized things for me, and that was I needed a technique, and I knew I needed a technique. And as I go through the back office, I'm vacillating from one technique to another, and I'm not going anywhere.
Right.
This provides clarity. As you hear in some of my questions, that's why I was asking the questions, because I want to know what technique are we using here, and the language you use interchangeably. The buy market, a bear, a bullish, or a bear. You know, what language you're using, what technique you're using, and you have to decide on that. Just like she used the metaphor of a black and white car. I have to make a decision when I go to the garage. Am I going to drive the black car or the white car?
Can't drive both.
I can't drive them both at the same time.
Yes, sir.
And that's what I saw the value. So it was a no-brainer investing in. More importantly, it was a no-brainer to me because now only I get a coach, but I get a video where I can go back. That's why I said in there, I didn't want to waste your time. I said, I got it. I'll work on it. That means I'm going to go back and look at it myself.
Right.
She put it out there. What is it that I'm not getting that she's saying? And if I have to play it 1,000 times, then that's what I'll do.
And recordings, man. That's the key. We record this.
You know, you good in basketball, you got to shoot 1,000 free throws.
Talk about it.
Raise your percentage.
Yes, sir.
So no.
That would make a great testimony, Philip. I just joined in later. I just got up because it's early morning here in Australia. But I've been on all the MBA workshops and I've watched them many, many times, and I continue to watch them all the time. And having this resource for everybody that was on here is gold. Don't just watch it once and think you can go onto the charts and make $1,000. Just watch and trust the process like we're told. So that's a great testimony, Philip. Make sure you send that to Tracy. Awesome.
Thank you.
Yeah, Drew's a master now.
Again?
I'm still a student, Lamar. I still lose, don't worry. I lost on that damn GA the other day because I wasn't looking the same as Oren did. When I went back and looked, I went, oh, I missed that candle.
Man, did you look at GM though?
No, I didn't. I just saw on GA. That's my bear.
See, and you know what?
Wait, guys. I'm gonna let y'all keep talking as I what you call it. But I just wanted to make sure. Did everybody understand what the potential move is on Euro USD?
Yeah.
Okay. Yeah. So what you could do is it's already tested that line once and almost a second time. The only thing you could do at this point is to put a sell limit at that line. It may hit the line, it may not, because we already retested. But it could kind of consolidate a little bit and hit it again. And if it hits it again, you're gonna put a sell limit there. If it hits it again, it's gonna grab your order and you're gonna go where? To the next
line.
The next line or
zone consolidation.
The trend line.
Or trend line. Or just do consolidation.
Come on, y'all. It's two things.
Yeah. Next zone. The next zone.
Previous zone consolidation.
Thank you. Yes, the next zone or the previous level consolidation.
Mm-hmm.
Okay. If you see a trend line, great. That might be another level of confluence to just show you that it might wick right there or it might go down there. But the idea is that if you have a trend line that crosses a level that also is in confluence with a previous level consolidation, that's 3 reasons why you get out right there. It's not or, it's and, trend line and level and previous level consolidation. That's why I'm getting out right there. Not do I get out because of the trend line or because of this. It's all of it. The more things that you have that line up, the more confident you should be about that decision. Right? That's why you hear people say, oh, that's why in IML they teach you have to have the 4 confirmations. What's the 4 confirmations? Let me hear it. If you're going to play the game.
You got to select your pair.
No. The 4 confirmations.
Support resistance.
Support resistance.
Pull back or.
Pull back.
Yep. Trend line.
Trend line.
And price reversals.
Price reversal area.
Yeah.
4 confirmations. So in other words, if price is at a trend line, if price is also at a support resistance line, if price is also at a price reversal area, and if price is at a pullback, all at the same time, you pretty much got a slam dunk. You understand what I'm saying? You got to know the rules to play. Otherwise, you kind of guessing. Okay? So remember that. Go back. Study those rules. Support resistance, price reversal, pullback, trend line. You should know those all the time. If I would have come to your house and knocked on your door at 3 o'clock in the morning and had a big old camera sitting right there from MTV Cribs, and we shining a light on you, and I said, Earl, what are the 4 confirmations? You ought to be waking up out of your sleep saying, support resistance, pullback, price reversal, trend line. You should be saying that like that. Not like, oh, Lord, I don't know. It should be so deep in your subconscious that every time somebody asks you, it come out. So you guys need to say these like affirmations. You guys understand? Say them like affirmations. If you really wanted to learn something, if you were learning the script for a play, or you're going to be on TV for a show, you got to know your lines. How do you learn your lines? By repeating them over and over and over. Right? Know your 4 confirmations. So then when you get to a point where you see, wait a minute, price is hitting the trend line. Wait a minute, at the same time it's hitting the trend line, it's also at a support resistance. Wait a minute, this is also in a pullback. This is also in a pullback. And oh my goodness, we are really at a what did I say, price reversal, trend line, support resistance, and pullback area, right? It's all 4 of these at the same time. Pull the trigger. Pull the trigger. Don't be afraid, like Oren say, don't be scared to trade. Don't be scared to trade. If the confirmations are there, go for it. All right? So I want you guys to study this, memorize those 4 confirmations. If you forget them, it's in IML TV, IML Academy, and also inside the NBA members back office back there. Guys, if you click on that download section, I put together a 1-page trading plan for you, and I put together the cheat sheet for the 5 steps to marking up your chart. You can download those. Like, I'm trying to bring it so it's not that hard for you, you know? So download it. I put the downloads there for you. It's a 1-page trading plan and the, there you go, and the cheat sheet. And then use them. Somebody listening. Thanks, Lamar. Hallelujah.
Tracy.
All right.
Tracy.
Yes.
I'm very sorry. I just found my pen. Can you, the price reversal, the support resistance, the pullback, and what was the last one? Was it a trend line?
Trend line.
Yes.
Thank you.
You got it. All right, guys. So I'm out of here.
Hey, Tracy.
Yes.
We got Stevenson Lindor tomorrow at 2:00.
Yes, 2 p.m. Eastern. We're gonna have Steve on.
Okay. Thank you.
Y'all, it's like it's never ending, ain't it? Like, God dang.
Hey, that's a good thing.
When is this gonna end?
That's a good thing. Let me keep on going.
All right. Y'all have a good rest of your night.
That's mine.
Well, I'll see y'all Sunday, and then I'm gonna see you Monday on Charting Workshop.
All right.
Bye, guys.
Bye.
Good night.
Good night, everybody.
Good night.
Good night.